Hi, I'm Tom Montgomery, and this is how you sell without selling out. Rogers that.
Hi, everybody. I'm Rogers Healy, and welcome to Rogers That, a podcast dedicated to selling without selling out. Today, we have someone who's been a part of a lot of selling, but has never sold out. My friend Tom Montgomery, I met him a few years ago from my dad. Over the course of my career, 25 years almost, there's probably 3 or 4 people my dad has gone out of his way to make sure that I meet. Tom was number 3. I'm still waiting for number 4. But my dad has talked about Tom for a long time. It's someone that he admires, that he respects, he cares for, and just somebody that he said, you need to drop everything and come and shake his hand. And he's become a friend. I'm going to give you a little background on Tom, and then we're going to get into conversation. He is the founding partner of MMCG and the managing member of Montgomery Capital Advisors, which specializes in crafting smart strategies for tax planning, mergers, acquisitions, and business growth. Before his work with MCG, he led Beal Capital Markets, overseeing more than $2 billion in investments. He's also founded Montgomery, Baggett, and Drews LP, a CPA firm based here in Dallas. He has a master's degree in accounting with taxation from Texas Tech University. He's a numbers expert. He's a people expert. He's creative, and he has a knack for turning financial challenges into growth opportunities. We're excited to hear his story, but I also want to make sure to know that Tom is probably the first person to leverage his expertise in accounting into sweat equity. And that's kind of how we really connected over the world of venture investing. And so I've learned a lot from him just by proxy. This is only the 4th time I've been in the same room as him. But with all that being said, I'm excited to introduce my friend Tom Montgomery to the podcast.
Rogers, thanks for having me.
Yeah. How did I do with the intro?
I think that was great.
Did I forget anything?
Well,
you were just saying that you were CFO of a publicly traded company before we started. I didn't get that part in there.
Well, if you try to tell an old guy's life story, we'll be bottled up here for short. But yes.
Really?
So when I sold my first CPA firm, I actually was going to sell it to one of the consolidators here, which became McGladrey. And my largest client was an internet company based in Australia.
Wow.
And I had written a strategic plan for them and was implementing it. And their stock was up 3,000% that year. And they didn't want to lose me. And so they bought my CPA firm, and
Wow.
I became the CFO of an Australian public company.
Did you move to Australia?
I did. The original plan was not to move to Australia, but about 3 months after they acquired my company, the CEO resigned.
Wow.
So I agreed to move to Australia to stabilize the company while they hired a new CEO.
Wow. Well,
in transition.
We're getting even off subject already. It's so fascinating. But maybe who is Tom Montgomery? Let's start with the most important question.
Yeah, great question. And again, I think I have my brand, but the bottom line is, I grew up in West Texas from a very poor family, and but I was able to get a great education at Texas Tech. It taught me hard work. It wasn't all my friends made fun of me because I went to Tech and I didn't go to the other schools.
My wife went there.
But
you went there.
It was an unbelievably great education for me, and I hit the ground running. What I didn't want to do, I saw my dad struggle financially, and I saw how much it pained him that he couldn't give us the things that he thought we needed, or at least what we wanted. Even though I never felt really disadvantaged growing up, I had some disappointments, but nothing significant. I had 2 parents that loved me and stabilized. But it created a work ethic for me that served me extremely well. And from that, I've been able to build a successful career and create a great opportunity for my kids in the future.
Yeah. So did you go to college with the mindset of wanting to get into accounting and finance?
Yeah, I did. I classic case. I grew up poor. I wasn't, well schooled in manners. I hadn't been to a restaurant other than a drive-through.
Really?
My pretty much my whole life, and so I just felt out of place, and I just didn't want to be there. So I really looked at finding something I was good at. And I took a bookkeeping course in high school, loved it. Wow. I was pretty good at it. And I said, I could be successful in accounting.
So did you want to pioneer like the entrepreneur side of accounting?
No, not at all back then. When I went through college and even my first few years at the CPA firm, I went to Arthur Andersen, a very large CPA firm at the time, one of the big 8. Had no interest in it. I just wanted to have a good financially secured life for me and my family. And that was my motivation. It wasn't until a little bit later that I got the bug, and I realized that no matter what, the accounting by itself was just going to be a job. It was just a lifestyle. It'd pay for a living, but it wouldn't make me any real money. So I did merger and acquisition tax. That was my specialty. So I was aware of all these transactions. I learned transactions, and I got the deal bug. And so even then, it wasn't me being an entrepreneur. The viewpoint really was for me to invest in deals that I was advising on, and not start my own CPA firm.
But even that had to be so groundbreaking.
Yeah, it really was. So I am a little bit unique because I'm not risk averse like most accountants are, and so it was at least unique in the accounting industry. And quite candidly, that's what led to me leaving Arthur Andersen. Trying to do deals and invest in deals where you're inside a large audit firm.
Conflict
was gave the appearance of conflicts. And so just the process of going through that was extremely cumbersome and frustrating to me. And so that's what, really the primary reason I left, that CPA firm.
Do you remember the first deal that you wanted to pursue?
Yeah, it was real easy. The first deal that I actually pursued, I'm not sure if it's the first one I wanted to pursue, but the first one I actually pursued was one of my best friends from high school. It was a year earlier. And he was a medical distributor and came up with a new concept of doing medical lasers in physician's office. And it was extremely cumbersome. There wasn't a reimbursement model for it. It was pretty difficult, but he came to me to help him write a business plan. So I wrote a business plan with him and raised his first $500,000 of seed capital.
Wow.
And got started. And luckily we did that in 1989, and it actually went public in 96.
Oh my gosh.
So that was our first great success.
Wow. So I want to get inside your head a little bit. I think that we look at things similarly, but also very different. And even in the 80s, when you're working at one of the big 8 companies, which I think, how many are there now? Big 4?
Big 4.
So you're seeing this. And so what does your mind initially go to? Is it to the potential? Is it to the risk? Is it to the fact that they've got a great team? How do you go and assess it as an accountant, an entrepreneur, and as an investor?
Yeah, from day one, as an investor, as a financing partner, as somebody who represents their financing partners, it's always about the people. You give me a great team with an okay idea, and it's going to be a great company. You give me a great idea with an okay team, and you're going to have an okay company.
So how does that conflict with your classic background in education? How do you have these conversations with yourself?
Yeah, again, the nuts and bolts of it as an accountant, I think I never put too much weight on historical accounting. I was all about financing of it. But I think a big part of this, I just knew my limitations. I didn't have the capabilities to be dynamic and super creative and come up with these concepts which would change the world 2 or 3, 4 years later. I didn't have that type of vision. Or to partner with anybody, I need to rely on other people. And so I sought out the best people, best decisions I've ever made.
So how would you describe that to, a founder, an entrepreneur, maybe somebody in your position a few years back? Is it focus on, find out what you're not good at as quick as you can?
Yeah. I think
or what doesn't excite you as quick as you can?
Yeah. I'm not sure excitement is that critical to it. I think you got to have a belief in what you're doing. But yes, with an entrepreneur looking at it right now, the interest is you need to look at what the marketplace wants, not what you want. And so often we start opposite. We come up with an idea. We think we fall in love with our ideas. And I think what I like to find in people is somebody, who comes up with a concept. of not, they love their idea.
Hmm.
They see a need in the marketplace and wants to fill it.
So what does that look like for you too? How do you navigate, maybe you don't wear pearl snap shirts, right? Maybe you don't drink water out of a cup, but what is your headspace for finding that the marketplace actually needs that company?
Well, I think the perfect example is Harvard.
Yeah.
You come here, this was driven. Kevin came up with the concept of Harvard because he had a bad experience with his kid and
Right.
he was scared and he knew he could do something better.
Mm-hmm.
And so it wasn't something that he wanted to do or came up with some idea that he thought was novel or cute. He came up with a concept that created the better mousetrap that provided real value to families and moms and safety and security to families. And that's why I think he'll be immensely successful.
Yeah, I agree. And Tom's a part of the Harvard team with us. Kevin was in here 2 weeks ago. He was one of the first people to come in and talk about Mizzen and Main, and then to have him come in and talk about Harvard, it was crazy. It was like two different people and just a different type of confidence. Second time founder, someone who has made mistakes with Mizzen, which I was a part of. But yeah, it's been interesting, and he's a man on a mission. He's going to figure it out. So talk about your background with leadership, right? So the people that you've mentored, and I know that you're a part of helping children's hospitals and helping, people with their legacy and all these different things. So how does your background in leadership affect your day-to-day now?
Well, I think it's critical because at the bottom line is I'm lazy and don't like doing anything. And so from a lot of perspective, I rely on my leadership to get people to help me create our dreams and our visions and our success. And so I've worked really hard at connecting to people and build that. But I think most people, the thing I like to make a point about leadership is not the person at the top of the pyramid. Leadership starts with everybody within an organization, and a lot of people don't focus on leadership until they're on the top of the pyramid. What I learned that being a leader, whatever you're doing, whether you're the day maid at the office building or the receptionist, all the way up to the CEO, you're the leader of whatever you're doing that day. And so you need to look at how to best get that done. And take pride in your work really hard, but get people to participate. For instance, our day maid, we coached our day maid where people in our firm became such good friends with her. We want to do her job for her. We wiped her bathroom countertops off. That was expected to us. If the trash cans were overfilling, we took care of it before she needed to. That's what a real leadership does. And so I took that view and I started at the bottom and worked up. But I always felt each step of the way, I was a leader of the job and the opportunity that was put in front of me. And so that led to me being very natural when I did start my own firm and built it up to a very large CPA firm in Dallas. And I think a lot of that was because my leadership capabilities attracted the best people to come to our firm.
And they stayed with you.
And they stayed with us. Critical aspect of it.
That's one of the things my dad told me too, is that his people are loyal. They stick with you. And it just obviously says a lot about you.
Yeah. I mean, trust and loyalty are critical aspects of leadership.
Yeah.
And we put a lot of emphasis on that. And, if you look at a lot of business books, there's a lot about, clearing out the bad apples quickly.
Mm-hmm.
And I think there's a ton of truth to that. But at the same time, there's a ton of truth to taking good people and coaching them and mentoring and helping them. And sometimes they don't deserve the amount of investment you made in them. But what I found, it always paid off because everybody else is watching you and they're seeing you invest in this person and you're seeing you care about that person and want that person to be successful, even though they've made mistake. And what that does, it creates an atmosphere where they're thinking the same thing. Gosh, if he will do it for her, he'll do it for me. And it creates an unbelievable culture and a behavioral aspect where everybody is sort of caring about each other and feeling part of it and feeling connected. And that's a critical function of success, critical function of team. And one of the huge byproducts of it was a significantly lower turnover rate, which is one of the 6 or 7 major problems of public accounting is turnover. It's extremely costly. And our turnover rate was about 1/4 of the national average.
Wow.
Which even when we were a small firm, that was about $2 million a year of additional profits by just having reduced turnover rate.
Wow. So it's a great lead into something that I didn't have on here too. But again, another nugget from my dad. In his own way, he said that you're a master at, I don't know if it's time blocking, but if Mondays are your days for interviews, you're not going to do an interview on Tuesday. You're very regimented with how your week is structured. Can you dig into that a little bit?
Yeah, without a doubt. And again, I have a big philosophy. It follows a little bit of Warren Buffett's, which is lead a simple life and save your time for the most important things. And the problem with anybody, especially an entrepreneur, when you're wearing so many hats, you have a tendency to spend your time with the person who's yelling the loudest, or the biggest problem, or the people that are reaching out to you aggressively. And those, by just definition, usually aren't the most important things that you should be doing. And so I developed very early on mechanisms. Number one, to simplify my life, make it easy. I have about 5 pairs of clothes, and that's all I wear. I don't give any time at all to what I'm gonna wear in a day. I have people that anything I can delegate to, I delegate it down to it. But what I found too was that if I didn't regiment my time allocation, I ended up not doing the most important things. And so I literally blocked off my schedules to make sure every day I did the most important things first. But at the same time, I didn't let anything overwhelm other things. So for instance, being the lead business developer for my firm, I had to be in the marketplace all the time. That being said, I wasn't going to be successful unless I spent time with clients. So I worked really hard to do block scheduling with my assistants. And so we would have it where I would have one networking event a day. I would have one what I call prospecting. A networking event would be somewhere where I went to an FEI meeting where I'm meeting maybe 100 different people that would be there. And this prospecting meeting would be a one-on-one meeting with a potential client with me. And then I tried to go to one proposal a day for a new client. But then I tried to meet 4 times a day with a client, existing client.
4 different ones.
4 different ones. And then my 5th one is every day I had one meeting with somebody in our firm. Those were my 8 key block schedules. I tried to have 10 meetings a day. I had left 2 that were open. So we had the flexibility that if there was 2 important prospecting events or networking events, I could use one of those open schedules to do it. But sometimes my assistant I could have openings the next day for a certain category, but somebody called and wanted to have me go to a networking event. She said, "Oh, he can't do that until 3 weeks from now."
Wow.
Because I wasn't going to get overwhelmed with any one activity.
How long did it take you to get comfortable with that cadence?
Well, I don't think it was a question of comfort. It was a question of discipline.
Right. How long did it take you to get disciplined with it?
Yeah, it was really hard, and you really had to stick to your guns, and you really had to triage very aggressively, especially when an important client called, and you'd filled up the schedule with other clients. So you had to show some common sense and flexibility on that. But in that case, the most important things were always clients, and clients would trump all the other meetings if necessary.
Delegating. You mentioned the art of delegating a few different times. Is that something that you feel like you're great at? Like even with me, it's like, emailing and scheduling appointments and stuff like that. Are you still involved at all? Or you fully trust that it's going to get handled and you just got to show up?
Yeah, I trust my team more than I trust myself. And delegation is a huge key to my success. I don't think I would have been able to accomplish the magnitude of things I was able to accomplish at the CPA firms and with the Montgomery Capital Advisor and in my private life without delegating everything that I possibly can. And so, we really did try to triage those. I had to do the most important things that were strategic and critical to our success that I could do better than the other people. And anything else that they could do as good as me or almost as good as me that weren't necessarily critical, I should delegate. And so the hard part for me was privacy. To do that, you sort of have to open kimono. So your assistants have to have access to your emails, they have to have access to your texts. And quite candidly, access to my texts caused some disintermediation with my wife. How can I text you anything without knowing that Charlotte or Sherry or Emmy would see it? And the answer is, don't text me anything that you don't want to see because they're going to see it. But I'm also going to get back to you sooner because they're seeing it. So big part of it. But it was hard to give up privacy. But it was critical to empower them to do that.
Is there anything you miss about the minutia, about the stuff that?
Not at all.
Yeah.
Not at all. I mean, again, when you move up to the highest and best use, this all is about impact, making a difference in people's lives. And by me moving to my highest and best use, my ability to create impact is significantly higher.
Wow. So let's talk about the impact you're making with Montgomery Capital Advisors. When did you start? When did you start the company? What is the company made of? What are you doing that excites you currently with the company?
Great question. Obviously it's one of my pride and joys, and just recently 2 of my sons have come to work with me.
Really? Wow.
On it. And so I'm super excited with it. But I left Arthur Andersen in 1990. And I almost immediately wanted to get into the deal business. So we had my CPA firm was going to be the way I made a living because I didn't have the capital. I had a $43,000 net worth. I had $30,000 in a 401k and I had $13,000 of equity in a house. And that was my net worth. So I couldn't go into the deal business. I couldn't live and support a family living deal to deal starting off. So CPA firm was how I made a living. But almost immediately within a year, Ross Jessup, my partner at the initial CPA firm, we started our first private credit fund. We saw a unique niche where we thought the risk-reward ratio of funding private debt was better and less volatile than equity, and we chose that path. And we did our first credit fund in 91. At the same time, we did our first deal, Paul Hirschman's business, which was Laser Support Services.
The one that went public?
That ended up going public.
Wow. And so it just evolved.
And just evolved and continued since then.
Did you find yourself attracted most to one different vertical, or is it all about the people and then maybe the vertical, or was there something that you were surprised that you fell in love with?
Yeah, so really great question because this will go hand in hand with a lot of what you do with Morrison Seekers, and that is, I originally did not think I would do private debt or private credit. I thought I'd be an equity player from day one. But what I found in the marketplace is a lot of entrepreneurs overpriced their equity at the time and downplayed their risk. And actually closing opportunities that I felt had the appropriate risk reward ratio was really difficult for me. But at the same time, I found the opposite. And that is because they downplayed the risk, they were willing to pay more for debt. And in that scenario, I could hedge my downside by being in debt on the cap stack rather than as equity. Most of the time, secured debt, and help them implement their business plan, but get rewarded appropriately in relation to the risk I was taking. So I intentionally capped my upside for having a significantly lower downside.
So maybe walk us through your these are all high level fancy terms. Maybe just talk about debt versus equity. What does that mean? If somebody's watching, like an easy parallel, how could you easily describe all those things you just mentioned?
Yeah. So equity is the hard money that has the upside of the business completely. So once all the creditors are paid off, all the money from that business goes to the equity holders. Credit, if you think of it as bank financing, but these are for non-bankable companies, is they loan money and they have a fixed rate of return to get it. And you paid back their money and their fixed rate of return, and their debt goes away.
When they keep their equity.
And the entrepreneurs will own all the equity and have all the upside over and above paying that debt away. Now, there's all types of hybrid models, but in simplest terms, we're a debt player, and so we get a rate of return plus our money back, and we go away.
So, how did you think of it with the sweat equity? I mean, you were the first. This had to be so groundbreaking. You're saying in 1990, 1991, that's such a creative approach. I mean, what did that look like? Did people think that you were crazy? Like, did you get support from your team? What did that actually play out to look like?
Well, no question. Just like today, people think I'm crazy.
Same.
And that's part of us. It was a unique way to do it. Most people, really sort of challenge why I was doing this. Why was I working so hard? Why was I interested in doing this more than anything? But the great news is, I had 9 great years at Arthur Andersen. I was on their deal side. I saw a tremendous amount of transactions that worked really well, and a lot of transactions that didn't work very well. I saw a lot of structures that I liked and saw a lot of structures I didn't like. And I had a great diversity of experience. But, one of the things I loved, not to waste the story, but I got a ton of different industry experience. My first 2 years at Arthur Andersen, I was in oil and gas exclusively. I moved to real estate for a couple of years, then moved over to financial institutions. And then when I was sort of bored with financial institutions, and that's why I migrated to represent merchant banks, venture capital firms. There wasn't private equity in the early 80s. That was formed in the later 80s when KKR locally, you had Hicks and Haas get started, which became Hicks and Muse.
I'll be with Tyler in an hour.
Yeah.
Tyler Muse.
And so I was advising them. And so I took a lot of that information that I learned from that and then started applying it to my clients that were looking for equity, looking to start their own companies, looking for additional capital to implement their business plans. And that's where I got my sweat equity. I was willing to do that for no fees. But if I was successful, I got a little piece of the equity.
Wow. So out of all the deals you've seen, thousands of deals, and out of the thousands that you've been a part of, what's one company you're still waiting, something that you're like, oh my gosh, finally, there it is. Is it a new zipper? Is it a new beverage? What company in the back of your head are you still waiting to go and find?
Well, it's a great question. But I think this will show both my strength and my weaknesses at the same time.
Okay.
At the end of the day, I'm still an accountant. And so if there's one critical mistake that I made in the investment business is that I sell my winners way too soon and hold on to my losers way too long. Part of it's the professional challenge of fixing it. But a part of it is just this uncertainty of me not having great vision, not being super dynamic, not understanding where the world's going necessarily. I see more of the risk than I do of the upside. And so I tend to sell a little too early. So there's nothing out there that I'm waiting on that's going to change the world. but there's a lot of things that we're working on today that impact the world, and they're really fun. And it's because of the people that are involved and the value that we're creating for our customers.
Okay, well then a follow-up, biggest surprise company that was a success.
It probably had to be my very first company, Laser Support Services. It was formed by a fraternity brother of mine, one of my best friends to this day. Great sales guy, worked at a medical distributorship, and had this concept that he could sell more lasers if he could put them in physician offices rather than into hospitals or surgery centers. And the reimbursement mechanisms were set up not to reimburse physicians for equipment in their offices, because the concern would be they'd use lasers to cut toenails when you don't need a laser. And so he created a safety net where the physician didn't get reimbursed the equipment, but they had the convenience of using it in their office. And so he created the safeguard, but it was a long process to change Medicare and Blue Cross Blue Shield that really controlled this Part A, Part B, physician services versus facility, because we weren't a facility and we weren't a physician service. We were in between to create that. But Paul, just through unbelievable hard work and perseverance, was very successful at it, and then drove it to very successful public offering.
Way to go, Paul. Talk about legacy and talk about, I follow you on social media, and you've got such a great fan club, and you do such a great job of spending time with your family and taking vacation and being present. And when the word legacy comes into your head, what do you think about professionally, and what do you think about personally?
Well, the first comment is there's several books that have been sort of life-changing for me. But one of them is called The Leadership Legacy. And I actually gave it to everybody in my firm 25 years ago. But at that point in time, I was starting to think about my legacy. I was in my late 40s, approaching my early 50s. And I said, I need to think about what my legacy is going to be. And the first, 2 or 3 pages of the book, it basically says, your legacy, you started your legacy when you were in high school. You're leaving a legacy everywhere you go, everybody you touch, everybody you say hi to. There's a legacy that you're leaving. And it's not one big thing. It's not one big company or one big success story. It's a combination of everything that you're doing. And to me, that was really life-changing, that, I'm going to have an interaction with 50 different people today. Some of them will be nothing more than our waiter at lunch, or me riding the elevator with somebody else. And I've adopted a mandate that I want to leave a legacy there. Maybe it's just a smile. Maybe it's a casual conversation. But I want to leave some type of humanity, some type of connection with everybody that I touch. So that's a big part of it. But yeah, if you look at, I'm 68 years old on Thursday.
Happy birthday.
So effectively, I have less than, 13, 14% of my life left. So I got a lot more water under the bridge than I have in front of me. And so you continue to think about that. But the main one is clearly my 3 boys and my wife, and our family. I've made a ton of mistakes along the way. But at the same time, I've been there for them and supported them. And the value that comes out of that is just unbelievable.
Way to go, man. Best advice you've ever received?
That's a really hard one, because there's so much that comes out of this. But I probably have 2 or 3 I'd like to share. But the first one is a concept that I've refined to what I call good enough. So my first 10 years of my professional career, again, I felt somewhat out of place. I wasn't polished with social graces. I talk funny. I mispronounce words. Sometimes I use very poor grammar. And I was always extremely self-conscious. My first day at Arthur Andersen, I got sent home to buy a new suit.
Oh, man.
And I was conscious about this. And so I got hung up with this, oh man, my clothes aren't nice enough, or I don't talk well enough, or I was always with it. And I had a really good friend come to me and says, Tom, you're good enough. And I laid in bed for a few nights and came up with it. And I just relaxed. And I finally got to the point where this is who I am. Take it or leave it. If you're going to judge me on my few weaknesses and the things that stand out on me, then that's your problem, not my problem. And what I found was not only did it empowered me to be more aggressive, I just became myself. I quit being afraid to speak in big groups. I quit being afraid to take the lead on things. I didn't care if somebody thought I was using the wrong fork at the restaurant. I didn't worry about my clothes weren't good enough, or I was driving an old car. What I found, though, not only was it so refreshing and liberating for me, what I found was my relationships totally changed almost overnight because I was being more authentic and more transparent and more comfortable and more vulnerable with my own weaknesses and my insecurities. People did two things. One, they connected to me. But two, they became the same way with me. And so it literally was life-changing in the deepness and of our relationships. And so instead of having these more hundreds of superficial relationships, I ended up having, scores of just great intimate relationships with people. And those relationships are 99% of my success.
Wow. Best advice you'd give somebody?
Well, the
good enough.
Yeah. Good enough is probably pretty high on the list. It's the messaging I try to give my kids, every day. But I think what goes hand in hand in there is, I have three sort of foundational principles. One is be grateful for what you have. Don't concentrate on what you don't have. There's so many great things in everybody's life. And all too often we define ourselves by our weaknesses, not what we have to offer or what we have. But what goes hand in hand with that is being humble at the same time. So if you concentrate on gratefulness too much, you develop a level of cockiness, develop a level of confidence that thinks you're better than other people because you're concentrating on your strengths. And at the same time, you need to realize and be humble enough that overall, you're not any better than anybody else in this world, no matter what their role is in life, no matter what their financial position is, or anything else. We're all humans and we're all equal. From that, he kept it balanced. And to me, those are two foundational principles that allow you to accept all the other principles that you need, as far as a great attitude, as far as being loyal, being kind, being trusting, being hardworking, all the different things that are critical to your success. It's harder to do those if you don't have that there. But the final comment I'd make about that is purpose. People keep trying to find this great purpose in life, and this goes back to legacy a little bit too. You don't need some great purpose in life. You can if you want to, and you don't have one purpose for your life. you can have a purpose for that day. I'm going to get out of bed and I'm going to do something good for somebody. I'm going to do something great. And that purpose will drive you to unbelievable success for a long period of time. And my purpose was quite easily that I want to impact people's life for the better. And I try to do that with the people that I'm closest to the people that I pass in the hallway. My kids make fun of me because I'm still grew up in West Texas, where you're out on a remote highway and you wave at the person crossing to you on the highway. You never don't see that person. 50% of that time, the person doesn't see you wave, but you wave anyhow. It's a great way to live your life.
All right. A personal question on the accounting side. And I don't know if anyone's ever asked you this before.
Okay.
What's your favorite number?
Oh, that nobody's ever asked me that. and I can honestly say that probably would fall in the category I delegate it to somebody else that make that decision for me. So I could call Charla and she would tell me, but probably 7.
7. Okay. And then a follow-up, which I hate to do this, but your least favorite number?
Oh, it's probably got to be Snake Eyes. So,
really?
Yeah.
Oh, he's taking us to Vegas.
Yeah.
Financial advice, everybody watching, no matter where they are in their stage, what would be your one piece of financial advice?
Well, especially, especially for young people, so I'm changing the premise of your question a little bit, but, I believe in the power of compounding. It is so powerful. And so, the real question is start building some capital and putting it to work and build. My 2 days before I started Arthur Andersen, it was in December of 81. So ancient history. But Scott Burns, who was Dallas Morning News business writer for decades, wrote an article called The $3 Million Mercedes. And it took 2 people that were age 22, just got out of college, and one person bought a $28,000 Mercedes, and the other kid bought a $12,000 Nissan Maxima. And they both had $12,000 cash. So the guy bought the Mercedes had $16,000 of debt. For the rest of their life, they made the exact same amount of money and spent the exact same amount of money. When they retired at age 65, the guy with the Nissan Maxima had $3 million more in savings. The huge game changer.
Wow.
To go out there. And so too often we try to get rich quick. And one, it's just not as rewarding anyhow. It's fun. I'd love to win the lottery to go. But I tell you, I love more the journey of making my wealth over 40 years. And I made it financially and I made it through our relationships.
Yeah. The last question is, what's the best way to support you?
Well,
how do we follow your journey? How do we support you? I have a feeling people are going to probably reach out after watching and listening. So what's the best way to support you?
Yeah, the great question, that's hard in my life because I'm sort of in my 4th stage of life. And so it's more, there's nothing material that I want. There's nothing else I want to do. I'm reinvigorated because 2 of my kids are working for me. But the best thing they could do for me would be really support my kids. They're in that formula stage right now. They're entering their professional careers. They've been out of college for a few years now. And they got a long haul road ahead of them. And it's difficult to balance families and personal relationships and financial goals and objectives. And that's probably the most important thing to me. But I'll add, the inverse of this, because I do think this is a big problem with American culture. We have this rugged individualism where we don't think we need help. And we create walls. I can do this. I don't need help. I don't need to delegate it. I don't need to ask for help. I don't need somebody to come support me. I can do it on my own. And what I've learned is that is a major mistake, not only for you, but for them. And when it came to fruition, I'll tell you a quick story. Joe Ballou, when I started my first CPA firm, I told you I had a $43,000 net worth. I had to go ask Joe Ballou, who was going to be one of my new clients, who was taking a big risk to move his accounting work to me anyhow. I asked him to prepay his fees so I could go buy computers and other things I needed to do my job. And didn't sleep for 2 nights before I asked him. I offered him a discount and some different things, but I was still nervous about it, asking him for this favor. And he immediately jumped at it and he says, "Oh, Tom, I'd love to help you, man. I remember David Heap helped me get started and I never forget it. And he had such an impact in my life. I'd love the chance to help you." And I go, "Well, that's neat. What a great guy that guy is. He's just a great person." And I didn't read more into it than that, other than he's a great guy. But what I learned it was different. He made an investment in me. And so he now is interested in my success. And what came out of that is he became the most prolific referral of business to me everywhere.
Wow.
And if he walked in here today, Rogers, and I would say that, "Hey, I was hoping that you were going to become a new client of my old CPA firm," he'd go, "Rogers, you need to go with Tom. He's the best accountant in the world. He's great. He wouldn't have been anything if it wasn't for me. He had to borrow money from me to get started."
Wow.
And he takes a little bit of credit in my success. And I always say you can't ever sell more than 100% of your firm, but you can sell 500% of the credit. And so I have this brand ambassador in Joe because I ask him for a favor. And that makes him feel good.
Yeah.
So when we're the happiest is not when we're doing something by ourselves. Riding a roller coaster by yourself is not fun. Riding a roller coaster with a good friend is unbelievably great. But, we are happy when we're doing things for other people. And we deprive people of opportunity because we don't ask for help. So if I had anything, to tell people what they can do for me is let people help you. Ask for that, be appreciative. Don't forget to help. Be willing to return the favor, not on a quid pro quo basis at all, with no expectation of return at all. But be willing to help them if they need it. And not only will that make you more successful, it'll create more purpose and meaning to your life. And it'll pay dividends really for the rest of your life.
That was unbelievable.
So
that was awesome.